Question 1. What is the primary objective of the underwriting process in insurance? A. To increase the number of policyholders and revenue for the insurer. B. To assess risk and determine the appropriate coverage and premium for each applicant. C. To ensure that all applicants are accepted for insurance coverage regardless of risk. D. To reduce operational costs for the insurance company. Answer B. To assess risk and determine the appropriate coverage and premium for each applicant. Explanation. The underwriting process is designed to assess the risk of insuring a potential policyholder and determine whether they qualify for coverage. It involves evaluating factors like age, health, financial stability, and claims history to determine the type of policy and premium amount. Underwriters ensure that coverage is provided only to those who meet the insurer's risk guidelines and that premiums reflect the level of risk posed by each applicant. This ensures that both the insurer and policyholder are protected, while the other options are incorrect. A. This option is too general and doesn't reflect the main purpose of underwriting, which is to evaluate risk and set appropriate premiums. C. This is incorrect because underwriting is meant to identify high-risk individuals and may result in some applicants being declined, not accepted indiscriminately. D. While cost control may be a secondary goal, the primary function of underwriting is risk assessment, not necessarily reducing operational costs. Question 2. Mr. Thomas has submitted an application for homeowners insurance. Upon reviewing his application, the underwriter discovers that his property is located in an area prone to frequent flooding. What action should the underwriter take in this situation? A. Approve the application with a standard premium as the property is still eligible for coverage. B. Deny the application outright as flood-prone areas are always excluded from coverage. C. Approve the application with a higher premium to account for the increased risk due to the flood zone. D. Suggest that Mr. Thomas move to a different location to reduce the risk of flooding. Answer. C. Approve the application with a higher premium to account for the increased risk due to the flood zone. Explanation. In underwriting, flood risk is an important factor to assess when providing homeowners insurance. Properties located in flood-prone areas pose a higher risk of damage, which may lead the insurer to charge a higher premium or apply specific exclusions. The underwriter has the option to approve the application but should adjust the premium to reflect the increased risk. This is consistent with guidelines for insuring properties in areas prone to natural disasters such as flood zones where flood insurance may be required or additional charges may apply to mitigate the risk. Why the other options are incorrect. A. Approving the application at a standard premium would not appropriately account for the additional risk presented by the flood-prone location. B. Denying the application outright is necessary in most cases, as flood insurance can be included in the policy or higher premiums can be set for flood risk. D. Suggesting that Mr. Thomas' move is not a realistic or practical solution in underwriting and does not address the primary objective, which is to assess and manage risk. Question 3. Which of the following best describes the ethical responsibility of an underwriter when dealing with an application from an applicant who has a history of multiple minor car accidents? A. The underwriter should automatically decline the application based on the applicant's driving record. B. The underwriter should evaluate the applicant's risk based on their current driving behavior and the severity of the accidents and then set premium that reflects the risk. C. The underwriter should accept the application without considering the applicant's history since minor accidents do not impact the risk assessment. D. The underwriter should inform the applicant that history of accidents is irrelevant for underwriting decisions. Answer. B. The underwriter should evaluate the applicant's risk based on their current driving behavior and the severity of the accidents, and then set a premium that reflects the risk. Explanation. Underwriters have an ethical obligation to assess all relevant factors of an applicant's risk profile, including past driving history, while not discriminating unfairly. A history of multiple minor car accidents suggests a higher likelihood of future claims. Underwriters should evaluate the severity of these accidents, the time that has passed since the last incident, and any corrective actions taken by the applicant, e.g. driving courses or improvements in behavior. Based on this, the underwriter should set a premium that accurately reflects the applicant's risk, which may be higher than for someone without such history. Why the other options are incorrect. A. Automatically declining the application would not be appropriate unless the accidents were severe or the applicant is high risk, and even then, alternatives like increased premiums should be considered. C. Accepting the application without considering the history would neglect critical factor in the risk assessment process, which could expose the insurer to higher claims. D. Declaring the applicant's history irrelevant contradicts standard underwriting practices, as an applicant's past behavior is key factor in assessing future risk. Question 4. Which of the following best describes the concept of preferred risk in insurance underwriting? A. Risk classification that indicates the applicant is likely to experience higher than average number of claims. B. Risk classification that indicates the applicant is healthy, financially stable, and has low likelihood of making claims. C. Risk classification that results in higher premiums for the policyholder due to their risk level. D. Risk classification for individuals who have been previously denied coverage by other insurers. Answer: B. A risk classification that indicates the applicant is healthy, financially stable, and has a low likelihood of making claims. Explanation: preferred risk refers to applicants who are considered to have a low risk of making claims. This could be due to factors like good health, a strong financial background, or a clean claims history. As a result, underwriters categorize these applicants as lower risk and offer them more favorable premium compared to standard or substandard applicants. Why the other options are incorrect? A. This describes substandard risk, not preferred risk. C. High premiums are typically associated with high-risk applicants, not those classified as preferred risk. D. A previous denial of coverage does not define a preferred risk. Rather, preferred risks are typically accepted by most insurers without issue. Question 5. Which factor is not typically considered in the underwriting process for health insurance? A. The applicant's current health status, including any pre-existing conditions. B. The applicant's occupation and lifestyle choices, such as smoking or alcohol consumption. C. The applicant's age and gender, as they may influence health risks. D. The applicant's preference for the type of coverage or policy limits they desire. Answer: D. The applicant's preference for the type of coverage or policy limits they desire. Explanation: in the underwriting process for health insurance, factors such as health status, occupation, lifestyle choices, and age are essential in determining an applicant's risk level. These factors directly influence the likelihood of future claims and thus the premiums that will be charged. However, the applicant's preferences for policy limits or coverage types are not a determining factor in the underwriting decision. They may affect the final policy structure. Why the other options are incorrect? A. Pre-existing conditions are a critical factor in determining risk in health insurance underwriting. B. Occupation and lifestyle choices like smoking can significantly impact an applicant's health risks and premiums. C. Age and gender are key factors in assessing health risks, as certain age groups or genders may be prone to specific health conditions. Question 6. Mr. Harris applies for life insurance. He has a significant medical history of heart disease, but his doctor reports that his condition is well controlled with medication. Based on this information, what action should the underwriter take? A. Deny the application because of the heart disease history. B. Approve the application but charge a higher premium to reflect the increased health risk. C. Approve the application without any premium adjustment since the condition is well controlled. D. Suggest that Mr. Harris undergo a more extensive medical examination before proceeding with the application. Answer: B. Approve the application but charge a higher premium to reflect the increased health risk. Explanation: in underwriting life insurance, the applicant's medical history is an important factor in determining the level of risk. Although Mr. Harris's heart disease is controlled with medication, it still poses higher risk of future health complications compared to applicants without such conditions. Therefore, the underwriter may approve the application but the premium to reflect this increased risk. Why the other options are incorrect? A. Denying the application outright would be inappropriate unless the condition is severe and unmanageable. C. Approving without adjusting the premium would not accurately reflect the increased risk posed by the medical condition. D. More extensive examination may be suggested in some cases, but it's not necessary for all applicants with controlled conditions. The information provided by the doctor should be sufficient to proceed. Question 7. Which of the following is a primary goal of underwriting in commercial insurance? A. To minimize operational costs and maximize profit for the insurance company. B. To ensure that all businesses, regardless of risk, receive insurance coverage. C. To assess the potential financial and operational risks of the business and determine appropriate coverage and premiums. D. To offer low-cost insurance policies to all businesses to encourage market penetration. Answer: C. To assess the potential financial and operational risks of the business and determine appropriate coverage and premiums. Explanation. The primary goal of underwriting in commercial insurance is to evaluate the business's unique financial and operational risks. This includes factors like industry type, past claims history, and the business's financial stability. Based on this evaluation, the underwriter determines the appropriate level of coverage, sets premium that reflects the risk posed by the business. Why the other options are incorrect. A. While profitability is important, the main focus of underwriting is to assess and mitigate risk, not just to minimize costs. B. Not all businesses are insurable. Underwriting ensures that only those who meet certain risk criteria receive coverage. D. Offering low-cost policies without considering risk would expose the insurer to significant financial losses. Question 8. What is the impact of an applicant's credit score on the underwriting decision for property and casualty insurance? A high credit score has no impact on the underwriting decision for property and casualty insurance. B. A low credit score may indicate higher risk and result in higher premiums or policy denial. C. A high credit score is always required to approve the application for property and casualty insurance. D. The credit score only affects the underwriting decision for life insurance, not property and casualty insurance. Answer. B. A low credit score may indicate higher risk and result in higher premiums or policy denial. Explanation. In property and casualty insurance, an applicant's credit score is often used as a predictor of future claims behavior. A lower credit score is associated with higher risk, potentially due to financial instability or a history of late payments, which may correlate with a higher likelihood of filing claims. As a result, insurers increase premiums or even deny coverage for applicants with poor credit scores. Why the other options are incorrect. A credit score does impact underwriting decisions, particularly in property and casualty insurance. C. A high credit score is beneficial, but not always a requirement for coverage approval. D. Credit score impacts underwriting across multiple types of insurance, including property and casualty, not just life insurance. Question 9. What is the role of a reinsurance contract in the underwriting process? A. Reinsurance contracts are used by insurers to transfer the risk of catastrophic losses to other insurers. B. Reinsurance contracts help insurers reduce operational costs by limiting the number of claims they need to process. C. Reinsurance contracts provide additional coverage for policyholders who have reached their policy limits. D. Reinsurance contracts are used to eliminate underwriting guidelines for certain high-risk applicants. Answer. A. Reinsurance contracts are used by insurers to transfer the risk of catastrophic losses to other insurers. Explanation. Reinsurance is a form of insurance for insurers. It allows insurance companies to transfer a portion of the risk from their policies to a reinsurance company, particularly for large or catastrophic losses. This helps the primary insurer manage their risk exposure and maintain financial stability. Reinsurance are not used to adjust underwriting guidelines, but are part of the broader risk management strategy for insurers. Why the other options are incorrect. B. Reinsurance contracts are about risk transfer, not cost reduction in claims processing. C. Reinsurance does not provide coverage for individual policyholders directly, but rather between insurance companies. D. Reinsurance does not eliminate underwriting guidelines. It complements by providing a safety net for the insurer. Question 10. Which of the following would likely be considered substandard risk in underwriting for life insurance? A. An applicant with a stable job, excellent health, and no history of smoking. B. An applicant with a history of heart disease but no current symptoms or medications. C. An applicant with a clean medical history but a history of criminal behavior. D. An applicant who has recently been diagnosed with cancer but is in remission. Answer. D. An applicant who has recently been diagnosed with cancer but is in remission. Explanation. A substandard risk refers to applicants who are considered to have a higher than average likelihood of making a claim due to health conditions, lifestyle factors, or other risks. In this case, an applicant who has recently been diagnosed with cancer, even if in remission, would be considered a substandard risk because there is still a possibility of recurrence. A higher risk applicant for life insurance. Why the other options are incorrect. A. This applicant would be classified as a preferred or standard risk due to their good health and lifestyle. B. An applicant with heart disease but no symptoms or medications might still be considered a standard or preferred risk depending on other factors. C. A criminal history might impact the risk level but is not typically considered a substandard risk in life insurance unless coupled with health issues. Question 11. which of the following types of insurance would most likely cover damage to a business's inventory due to fire? A. Workers' compensation insurance. B. Business interruption insurance. C. Property insurance. D. Liability insurance. Answer: C. Property insurance. Explanation: property insurance is designed to cover damage to a business's physical assets, including inventory, buildings, equipment, and more, in the event of fire, theft, or other perils. Business interruption insurance may also apply if the business is unable to operate due to the damage, but property insurance is the primary coverage for damage to inventory, while the other options are incorrect. A. Workers' compensation insurance covers medical expenses and lost wages for employees injured on the job, not property damage. B. Business interruption insurance covers the loss of income due to covered event, but does not cover physical damage. D. Liability insurance protects against legal claims arising from injury or damage caused by the business, but not damage to the business's own property. Question 12. Which of the following is an example of a peril commonly covered under a standard homeowners insurance policy? A. Earthquake. B. Flooding. C. Fire. D. War. Answer: C. Fire. Explanation: a standard homeowners insurance policy typically covers damage caused by fire, theft, vandalism, and certain other perils. However, damage from earthquakes and floods is generally excluded and would require separate policies. War is also excluded from most insurance policies. While the other options are incorrect, a earthquake damage is typically excluded under a standard homeowners policy and requires a separate endorsement. B. Flooding is excluded in most homeowners policies and requires flood insurance. D. War-related damages are excluded from most insurance policies, including homeowners insurance. Question 13. Which of the following is true about liability insurance? A. It only covers personal injury claims. B. It provides protection against damages the insured causes to third parties. C. It covers only injuries that occur on the insured's property. D. It only applies if the insured is found negligent. Answer: B. It provides protection against damages the insured causes to third parties. Explanation: liability insurance provides protection to the insured if they are found legally responsible for causing harm to a third party, whether through personal injury or property damage. It typically covers legal fees, settlements, and damages. While the other options are incorrect, a liability insurance covers both personal injury and property damage claims. Liability insurance can cover harm that occurs off the insured's property as well. D. Liability insurance may cover damages regardless of negligence, though negligence often influences the claim's outcome. Question 14. Which type of insurance would be most appropriate for a contractor who needs coverage for damage caused by faulty work? A. General liability insurance. B. Professional liability insurance. C. Property insurance. D. Errors and omissions insurance. Answer: A. General liability insurance. Explanation: general liability insurance covers claims for bodily injury, property damage, and other claims arising from the contractor's business activities. It often covers damage caused by faulty work or accidents occurring on the job site. Why the other options are incorrect. B. Professional liability insurance covers negligence or mistakes related to professional services, not physical damage from work. C. Property insurance covers damage to the contractor's property but not damage caused by their work. D. Errors and omissions insurance typically covers claims of professional negligence, not physical damage from faulty work. Question 15. Which of the following is a characteristic of a no-fault auto insurance policy? A. The insurance company only pays if the other driver is at fault. B. Each driver's own insurance covers their own injuries and damages, regardless of fault. C. Only personal injury protection is covered, not property damage. D. The insurance policy only covers accidents that occur on private property. Answer: B. Each driver's own insurance covers their own injuries and damages, regardless of fault. Explanation: no-fault auto insurance policy allows for each driver's own insurance to cover their injuries and damages, regardless of who caused the accident. This system helps reduce the need for litigation and can speed up the claims process. Why the other options are incorrect. A. In no-fault system, each driver's insurance covers their own regardless of fault. C. No-fault insurance typically covers both personal injuries and damages to property, not just injuries. D. No-fault insurance applies to accidents regardless of whether they occur on private or public property. Question 16. What is the purpose of a deductible in an insurance policy? A. To increase the premium paid by the policyholder. B. To reduce the amount of coverage provided by the insurer. C. To share the cost of a claim between the insurer and the policyholder. D. To reduce the insurer's responsibility to pay for claims. Answer: C. To share the cost of a claim between the insurer and the policyholder. Explanation: a deductible is the amount the policyholder must pay out of pocket before the insurance coverage kicks in. It helps share the financial burden of a claim between the insurer and the policyholder and encourages the policyholder to take precautions to prevent losses. Why the other options are incorrect: A. The deductible typically lowers the premium rather than increasing it. B. The deductible does not reduce the overall coverage, just the amount the insurer will pay initially. D. The deductible does not reduce the insurer's overall responsibility. It just limits the insurer's payout for each claim. Question 17. Which of the following is not considered an insurable interest for property insurance? A. A homeowner insuring their own home. B. A business insuring its own commercial building. C. A person insuring a neighbor's house against fire damage. D. Lender insuring property for which they have mortgage interest. Answer: C. A person insuring a neighbor's house against fire damage. Explanation: insurable interest refers to financial stake in the property being insured. To purchase insurance on property, the policyholder must have an insurable interest in that property. A person cannot insure a neighbor's property unless they have financial interest in it, e.g. mortgage. Why the other options are incorrect: A. Homeowner has financial interest in their own home and can insure it. Business has an insurable interest in its own commercial building and can insure it. D. Lender has an insurable interest in mortgaged property and can insure it. Question 18. Which of the following would not be a valid exclusion in a standard homeowner's insurance policy? A. Flood damage. B. Earthquake damage. C. Intentional damage caused by the insured. D. Vandalism. Answer: D. Vandalism. Explanation: vandalism is generally covered under a standard homeowner's insurance policy as it is considered a risk that the policyholder may encounter. Exclusions typically include damage caused by events such as flooding or earthquakes or by intentional actions of the insured. While the other options are incorrect: A. Flood damage is typically excluded and requires separate flood insurance. B. Earthquake damage is generally excluded, requires additional coverage. C. Intentional damage caused by the insured is excluded as it is not insurable. Question 19. Which of the following is true about umbrella liability insurance? A. It covers only damages for bodily injuries. B. It provides additional coverage beyond the limits of other liability policies. C. It is required by all businesses. D. It provides coverage for the policyholder's property. Answer: B. It provides additional coverage beyond the limits of other liability policies. Explanation: umbrella liability insurance provides extra coverage that goes beyond the limits of other insurance policies, such as auto or homeowners insurance. It helps protect against large claims that exceed the limits of the primary policy. While the other options are incorrect: A. Umbrella insurance covers both bodily injury and property damage, not bodily injuries. C. Umbrella insurance is not required by businesses, but is often recommended for additional protection. D. Umbrella insurance does not cover the policyholder's property, but rather provides additional liability coverage. Question 20. Which of the following is an example of a peril in an insurance contract? A. The cost of insurance premiums. B. The actions of the insured. C. A fire that damages property. D. The insurance policy's coverage limits. Answer: C. A fire that damages property. Explanation: a peril is a specific event or occurrence that causes damage to insured property. Common perils include fire, theft, vandalism, and certain weather events. Why the other options are incorrect: A. The cost of premiums is not a peril, it's the price paid for coverage. B. The actions of the insured may impact the claim, but they are not classified as perils. D. Coverage limits define the amount insurance, but are not themselves perils. Question 21. Which of the following statements best describes underwriting? A. It is the process of determining the amount of coverage a policyholder is eligible for. B. It is the process of managing the risks associated with an insurance company's claims. C. It is the process of evaluating and selecting the risks to insure. D. It is the process of selling insurance policies to customers. Answer: C. It is the process of evaluating and selecting the risks to insure. Explanation: Underwriting is the process by which an insurance company evaluates and selects the risks it is willing to insure. Underwriters assess factors like the applicant's risk profile, the likelihood of a claim, and the potential cost to the insurer before deciding whether to offer coverage and under what terms. Where the other options are incorrect, A. Determining coverage is part of underwriting but doesn't fully describe the process. B. Managing claims is part of claims handling, not underwriting. D. Selling policies is the role of agents or brokers, not underwriting. Question 22. Which of the following is a primary purpose of the coinsurance clause in a property insurance policy? A. To lower the insurance premiums for the policyholder. B. To reduce the insurance company's liability in case of partial loss. C. To require the policyholder to purchase insurance equal to the full value of the property. D. To limit the types of coverage available under the policy. Answer: B. To reduce the insurance company's liability in case of partial loss. Explanation: the coinsurance clause requires the policyholder to insure their property for specified percentage of its value, typically 80% or more. If the property is underinsured, the coinsurance clause reduces the insurer's payout in the event of loss, depending on the amount of coverage purchased. Why the other options are incorrect? A. The coinsurance clause can increase premiums for the policyholder as it requires higher coverage levels. C. While coinsurance may require a certain percentage of value, it is not intended to insure the full value of the property at all times. D. The coinsurance clause does not limit coverage types but affects the payout in case of partial loss. Question 23. In which situation would a loss of use provision in an insurance policy apply? A. When a business is unable to operate due to a fire. B. When a car is damaged by hail and cannot be driven. C. When a homeowner's property is stolen. D. When a person is injured on someone else's property. Answer A. When a business is unable to operate due to a fire. Explanation: the loss of use provision typically applies to situations where the insured is unable to use their property as intended due to a covered event, such as a fire. It provides compensation for lost income or expenses incurred while the property is being repaired or replaced. Why the other options are incorrect? B. Loss of use can apply to vehicles, but it specifically covers the ability to use the car, not the damage itself. C. Loss of use typically applies to business operations, not personal property theft. D. This scenario would fall under liability or personal injury coverage, not loss of use. Question 24. Which of the following would be considered a moral hazard in insurance? A. A homeowner intentionally damaging their property to collect insurance benefits. B. A driver failing to pay their insurance premium on time. C. A business purchasing insufficient insurance coverage to save money. D. A property owner taking steps to reduce the risk of fire damage. Answer A. A homeowner intentionally damaging their property to collect insurance benefits. Explanation: moral hazard refers to the risk that a person may engage in dishonest or unethical behavior because they know they are covered by insurance. Intentional property damage to collect insurance benefits is a classic example of moral hazard. Why the other options are incorrect? B. Failing to pay premiums is a payment issue, not a moral hazard. C. Insufficient coverage is a financial decision but not a moral hazard. D. Taking steps to reduce risk is a risk management strategy, not a moral hazard. Question 25. Which of the following types of insurance would most likely cover the repair costs of a vehicle damaged in a collision? A. Liability insurance. B. Comprehensive insurance. C. Collision insurance. D. Personal injury protection (PIP). Answer: C. Collision insurance. Explanation: collision insurance covers the cost of repairs to your vehicle after a collision regardless of who is at fault. This is distinct from liability insurance, which covers damage to others' property or injuries, and comprehensive insurance, which covers non-collision damage such as theft or vandalism. Why the other options are incorrect? A. Liability insurance covers damage to other people's property or injuries, not own vehicle. B. Comprehensive insurance covers damage to your vehicle not caused by a collision such as theft or fire. D. Personal injury protection (PIP) covers medical expenses for you or your passengers, not vehicle repairs. Question 26. Which of the following types of property insurance is required by most mortgage lenders? A. Renter's insurance. B. Flood insurance. C. Homeowner's insurance. D. Umbrella insurance. Answer: C. Homeowners insurance. Explanation: most mortgage lenders require homeowners insurance to protect the property they are financing. This insurance covers damages to the property due to events like fire, theft, or vandalism. Lenders want to ensure that the property is protected in case of a disaster, while the other options are incorrect. A. Renter's insurance covers personal property within a rented space, not the structure itself. B. Flooding is required in flood-prone areas, but not universally. D. Umbrella insurance provides additional liability coverage, not property protection. Question 27. In which of the following situations would professional liability insurance most likely apply? A. A doctor who is sued for malpractice. B. A contractor who is sued for property damage. C. A business owner who is sued for negligence. D. A homeowner who experiences damage from a storm. Answer A. A doctor who is sued for malpractice. Explanation. Professional liability insurance, also known as malpractice insurance, is specifically designed for professionals such as doctors, lawyers, and accountants. It covers claims arising from mistakes, negligence, or failure to perform professional duties correctly, while the other options are incorrect. B. A contractor would need general liability insurance, not professional liability insurance. Property damage. C. General liability insurance covers negligence claims, not professional liability. D. Storm damage would be covered under property insurance, not professional liability. Question 20. Which of the following is an example of a condition in an insurance policy? A. The exclusions for damages caused by earthquakes or floods. B. The requirement for the insured to notify the insurer of a claim within a certain period. C. The premium payment schedule for the policyholder. D. The property covered by the insurance policy. Answer B. The requirement for the insured to notify the insurer of a claim within a certain period. Explanation. Conditions in an insurance policy are requirements or obligations that the policyholder must fulfill in order for the insurance coverage to be valid. One common condition is the requirement to notify the insurer promptly in the event of a loss, while the other options are incorrect. A. Exclusions refer to specific situations or events not covered by the policy, not conditions. C. The premium payment schedule is part of the terms of the policy but is not a condition. D. The property covered is part of the coverage description, not a condition. Question 29. Which of the following is a feature of an occurrence policy in liability insurance? A. It covers claims made during the policy period, regardless of when the incident occurred. B. It covers only claims that occurred during the policy period, even if they are reported later. C. It covers claims made during the policy period, even if the incident occurred before the policy was in force. D. It covers incidents that occur after the policy expires, as long as the claim is filed within the statute of limitations. Answer B. It covers only claims that occur during the policy period, even if they are reported later. Explanation. An occurrence policy covers incidents that happen during the policy period, regardless of when the claim is made. This contrasts with a claims made policy, which only covers claims made during the policy period, while the other options are incorrect. A. Claims made policies cover claims made during the policy period, not occurrence policies. C. Occurrence policies only cover events during the policy period. D. Claims under an occurrence policy must occur during the policy period, not after. Question 30. Which of the following is not typically included in a standard commercial general liability (CGL) policy? A. Bodily injury coverage. B. Property damage coverage. C. Professional negligence coverage. D. Personal injury coverage. Answer C. Professional negligence coverage. Explanation. Professional negligence, often known as errors and omissions, EO insurance, is not typically included in a standard CGL policy. CGL policies focus on bodily injury, property damage, and personal injury, but professional negligence requires a separate policy, where the other options are incorrect. A. Bodily injury coverage is a key component of a dealer policy. B. Damage coverage is also typically included in CGL policies. D. Personal injury coverage, such as defamation or false arrest, is part of the standard CGL policy.